closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Step in the fire, take my hand. I'll take you higher than you've ever been. Than you've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Bitcoin, ladies and gentlemen, Bitcoin went to the upside with a freaking fury. We were saying it was going to go in a ascending channel-like fashion, which it did do, like so, but then just ripped on up. This is the diagonal fib level. This is the 0.5, ripped up to the 0.618, even getting to the 0.65 of this region, getting into the overbought status on multiple time frames. We are hitting those pools that we've been talking about for the longest time. Let's just go to what pools are we talking about? We always go into the liquidity, ladies and gentlemen. Let's just do that for you straight away, as we do. Thank you for coming on in once again. Let's check it out. I have a mic coming. Tomorrow it should arrive, but I don't have the stand yet, so we'll see. Gonna get some better audio going on. I hope there's no audio issues today. Let's make sure it's all straight. Testing 1 2 3. Let's make sure the audio is good to me today. Looks like it is. All right. All right, so let's take a look at this. So, as we stated, we had $178 billion at 25.6, 110 at 26 even, 100 billion at 26.4, which we hit. And yeah, we still have 130 at 26.8, 73 at 27.2, 121 at 27.6, 70 at 28, and starts to taper at 60, 59, and 60, on its way up to 30K. But as we seem to be taken, our question all along was how low do they go before they come up to grab this, because they aren't leaving it intact, that's for sure. And sure enough, they came with a fury, and they used the catalyst of the FUD to the banks and the inflation rate being high to just send it. As everyone was afraid to long, they don't have to pay as many people, and they just took the opportunity to go for the gold, and they did it. Let's go into the graphs here. I don't even think it'll show on the 1 minute here on the liquidation levels. It just there's going to be so much below that it just obliterates the past minutes of data. Good morning, afternoon, evening, all that fun stuff. All right, so we had this little mini bullish projection that played out to a T at the 2 region. That's why we're seeing a little bit of fatigue at 26.375. We put this out as we're too fast for this chart. It's getting hemmed up. All right, so yesterday we were breaking up into this region, and we were talking about where we could go if we're going to remain bullish using just this impulse alone. What is this impulse retrace idea we're talking about? This is a trend-based fib extension tool that uses 3 clicks to create. You use the impulse, and based on the retrace of that impulse, it tells you where you could project into the future. So from this area here, this impulse from Monday all the way up to Monday open, from Monday mid-morning my time in Asia up to the weekly candle close down to the retrace in the London kill zone session. That impulse retrace idea gives you if you're going to be in the 236 region where you could expect it to go, and it surged up to the 1 region and held it. And based on it holding this region, this is how you could take profits below this region. So if you were in a trade from here, you could move your stop loss to these regions as it traverses them. You could play it here for safe keeping, or you could go here and you would have gotten banged out there, or you could have gotten banged out and considered re-entry as it held here, and it surged up to the 2 region. And so that was another 9.4% that it surged up. Unbelievable, right? And why are we getting that fatigue right here at this exact point in time? Well, this happens to be that fib region, and everything moves with math, and the math, if the math is sound, it should be accurate and precise, right? So that's where we're seeing that now. But if we go to a higher time frame trend-based fib extension tool, we're just getting up to the 786 region at 26.6. The liquidity on this 26.6 region would be, looks like it goes by 400s here, so we can't see it with accuracy, but there is 130 billion at 26.8. So are they going to leave that alone? I have no idea, but you do have a lot of longs that are entering here. Currently 36 billion in 38 billion in long liquidity stacked below. It doesn't really matter at this point with how much shorts they're knocking out on the yearly time frame, folks. These are yearly time frames that they're knocking out. Let's go back and see how long these pools have been building. This is a 2-year chart of liquidity. So this pool here, these pools of 178 billion, which are no longer there, they're gone. We're building since the June 14th time. June 14th, 2022, it's been building this pool and been adding to it since August 15th of last year. And so it's been thick, and now those are gone. They're no longer a threat to if there was a downside momentum. And so we're reaching into uncharted territory, break of structure of this trading range, which we've been down since June. Pretty amazing. And so we go into this, we can just see well, let's go to the lower time frame, what they built up in the last 3 months up there. So they caked their way up nicely to that, and they surged up on Monday when there was low liquidity. They still left this region with some liquidity intact, and they've currently gone up to this 26 region, even though it doesn't show it. They've gone up into here and gotten that 26.4, I believe. They didn't quite get 26.4 exactly just yet. So does that mean they're going to come up to 26.4 and get this $27 billion? There's still some more all the way up in this region, starting to cake it up here, and there's the 30 billion in total that cakes this whole region down. As they start releasing liquidity, there should be a time to absorb it or drop it at that time. So this 2 projection has kind of played out in my mind, but if you want to leave the fidelity there, you can kind of see where we held these lines to be true. All right, so let's go into some indicators and see what we're seeing on those. In the larger bullish projection, if it continues, it would be to go up to these regions. It would have to induce a lot more liquidity in terms of shorts to pave the way, but there's always people willing to short it. One interesting thing we had was a nuke that kind of gave back, but you would have seen the bullishness hopefully and taken this to the upside, or at least set your stop loss into profit and got out of there. And here we're getting another nuke on the hourly time frame. I believe 1 hour actually closed with the nuke intact. What happens when that happens? Well, that happened before over here at the previous top. At the previous time, we tapped the 25K region. Sorry, why is it? Everything is good. So on the previous time we had a nuke that locked in, this was where it put us on the hourly time frame. We had a nuke right there, only one of them locked in on the hourly time frame, and then that was the top before we retraced back down. So we had one false nuke that appeared so far right here where it stalled out, and you got the crossover, and then it got rejected. You had the stop hunt rise, and then it broke back down and bouncing off these Keltner channels. And we have one more hour that locked in here. Let's go see what Momentum Master B has. So this is the same thing that happened here. We were talking about the bullish reset of the stochastic RSI. What does that mean? Well, that means that you held horizontal, if you will, while this reset in this manner. And you didn't give back any price action as you maintained this, and you reset the stochastic RSI. And while you did have the alarm here, we were talking about how if in a bullish nature you would see these double top triple top scenarios as it pushes. And the same thing occurred here. You had horizontal price action with the reset of the hourly. So in terms of an hourly play, you could have just played this one too. And the money flow is coming out. We always talk about how the money flow and the RSI diverge, and this is why we have them together on Momentum Master B, link in the description. So you have the money flow index coming below the RSI here, the money flow coming out, RSI staying true. It likes to come back to the RSI. If it goes above the RSI, it does the same thing. If it goes below here, you got the hidden bullish, it kicked you back up. When it gets above, you got the hidden bearish, it came back down. So the volume weighted RSI, they call it, the MFI overlaid with the RSI tends to be a gravitational point, which it came back up to. So that plus the reset of the stochastic RSI, you could disregard based off the bullish nature of the move and just disregard the Williams entirely. But eventually the piper will have to come home to be paid. Chickens come home to roost, pay the piper, however you want to put it. So where is that fatigue going to happen? Well, I'll tell you one thing. The chances of it being a V-shaped are ways to ask to get wrecked and to FOMO into shorts. So what you want to do is you really want to break down to lower time frames and start to see these 3 hits and the fatigue before, and try to find that smooth entry on the second or third hit if you were going to look for a short. But you don't want to fight against the trend, my friends. You want to kind of go with the flow. So if anything, you want to look for where it might find like a retrace kind of intro, but most likely these things would come out and go into other coins. So we'll look at other projects after this, but so you got the 15-minute overbought at this time, and you'd be looking for, and you had the golden sun came into that nice range. It reset the Williams as well. So you got that hourly and that 15, and that double whammy. I don't know why the ultimates haven't struggling to load right now. It must be lag on my end on the server. Yeah, so you had the 2 time frames oversold here. You would have got that alert on your phone, and you would have been able to see that the hourly and the 15 reset nicely in this bullish manner. You got the cloud to flip over, and you could have just played this on a smaller time frame. It's crazy. And so now we're getting the nukes overbought on multiple time frames, letting you know about that. And it's not just multiple time frames. There is an exhaustion that is occurring on backtestable levels, which is why the nuke appears. If you're like, what does that mean exactly? Well, once again, you link in the description. You could go to momentummaster.info and read about what these things are in more detail if you're unclear. This is the ultimate entry formula that tells you when these time frames get exhausted potentially, and where you could look to possibly take profit and or switch directions. So you go down to here to this schematic at the features menu, and then you could toggle all the features on and off with this interactive display and see what all of the indicators are about. And you could turn on certain components like the stochastic array. What is the stochastic array? It will tell you a never before seen formula which simultaneously monitors more than 7 timeframes of information considering over 32 different indicator values, determining exhaustion points across all significant timeframes. With the candle close specific formula, it gives you a leading information as you go lower in time frame. So this is giving you the information of time frames exhausted. So if you're getting off of work and you just want to get into the charts as quickly as possible, as deep as possible, it gives you that deep insight into the market. So you're seeing multiple time frames overbought here and a potential fade, and it's locking in on these candles, which shows that there's a there's a punch packed behind the closure of the candle in that state. Since it's a candle close specific formula, it does appear, but locking it in is where you start to see there's an extreme elasticity push to those time frames, that tends to kind of either stall out or go down at that time. We did have rockets that appeared as well, which played out on the other side of the trade down here at the bottom. So we had those multiple times. We had those rocket entry points at different points at the market reversal, including the exact bottom. This is the exact bottom of BTC at 15K. This turned into a schematic of what to look for. So this is kind of what we're seeing on the opposite end right here, although as we've laid out with the liquidity, you still have some room to go. So you'd want to look for that to get completely cleared, ideally speaking, but last time it didn't occur. They went up to that 25.4 region and then left a bunch on the table and came back down. Yeah, it blew everything out of the water liquidity wise, so you don't even see the shorts up here anymore because we're dealing in higher time frames now. We're in such higher time frames, the 1 minute liquidation levels don't even apply. You have to be looking at these higher time frame pools. So where are we going to now is the question. So the CPI data was 6%, and yeah, leaves over 120 million liquidated in an hour. All right, so let's look at the S&P really quick. Let's see what happened with that. It looks like they gapped up and gave they're up 1.5% for the day so far. I was seeing those double bottom vibes, to be honest with you, and everything's like really laggy on my stream for some reason. I'm gonna just close this out, but there we go. Yeah, so we had this fair value gap back from January. We've left it here, and we tapped right into that to a T and bounced off that. And we're attempting to reclaim this higher time frame trend line. What trend line are we talking about? Let's go to the daily time frame and check it out. So you go to this higher time frame trend line. It's this bullish megaphone that's opening up. Let me turn off all the indicators first. So you have this bullish megaphone that curved out, created inverted head and shoulders, broke out, came back, fell back into this, and we're attempting to gap up and break out again on the S&P with this data. As the sentiment was starting to show no signs of reversal for the rates of the Fed, it looks like the extraneous circumstances are causing them to turn on the money printer again, which is going to start to see the value of everything increase just by the sheer nature of their money printer being turned back on. Yesterday we were going to go into how the S&P did this back in March 2020 and how they were going to claw back that. So basically in March 2020 we stood down here, you had the Black Swan event, and then that's about when they turned the money printer back on and we saw a straight year of upside. And then they started to financially repress. What is financial repression? It's when the Feds start to claw back the money that they artificially generated to pump up all of the markets when we were basically locked down doing nothing. So the money just came back up, and then they started to repress it back. And they wanted to continue doing that, but it looks like they're going to have to start turning it back on, which will cause this to go back up again because the value of the dollar starts to decrease, which causes everything else number to go up. So is it going to reclaim this trend line? Looks like it's already on the process of doing that. The bearish impulse is these levels here. If it reclaims this wall, then it gaps up to the next one. Let's go to the lower time frame, shall we? Let's turn this on now. You're seeing a lot of cumulative volume enter here over across all these time frames. So the 200 weighted moving average is just at this 0.65 level. We should probably, it looks like we're gapping up just to meet with the bullishness of the data. And so let's look at the 4 hours reset and the 12 hours reset here. So you could be seeing a 12-hour play from this bottom all the way to the upside in terms of like in general. Of course, it's going to wick and whack around liquidity wise, but we go to the 6 hour time frame. 6 hour in conjunction with the 12 hour is good for a market reversal on the S&P in terms of upside ideas. The 4 hour is in tandem with that, so you have these medium time frames in your favor right now for upside. The hourly is overbought, but you could be kissing this to come down and continue higher. Let's take a look at just this local fib retracement level from the top here down to here. Yeah, the 618 falls within the 65706 region. It's probably like a 66 of that. So you'd probably come up to this region at the bare minimum, and then possibly go, and then at that time this would probably extend out to here. Yeah, and then you'd probably bounce off that for the continuation. You got the 15 in your favor as well. The hourly is getting a little bit on the overbought side, but let's look at that on Momentum Master B to see. Yeah, you're getting overbought here. You do have room on the Williams to keep going with the MACD. The MACD comes down to both domains. It's a normalized MACD, which is pretty cool. It makes it leading, among other things. And then when it starts to get to the overbought region here, then it alongside everything else getting overbought, it starts to cool down. And when it gets down low, saying what's up to the Williams, then it starts to come back up. It's a pretty cool idea. You could turn on the histogram if you like the histogram as well. Completely customizable. It's all up to the user. So we look to the what's it called? We're at the outskirts of the cloud here, and the 786 bearish trend-based fib level, which also coincides with this. So all these like fib levels coincide with stuff that would be appearing dynamically on this indicator. So you'd basically be getting up to this kind of region area. There's a gap here on the hourly. Let's go look at some gaps. So as of this hourly time frame, we got the gap from here to that wick. And then if we go to lower time frame, get more precise with it, that one's still not recovered as has this one. Okay, so those look like they're valid on that smaller time frame. So yeah, it looks like it could still continue higher and get rejected off of these averages. You've just turned the adaptive moving average in your favor, and so you could go higher on the S&P, which would continue the move for BTC. Let's look at the dollar. So some players are positioning themselves in there to see these bounces. we were saying that it would come down if it held this dotted line at 103.352. This is the bullish trend-based fib extension level. If it holds this 236 level, it still could see upside up in this region. But, you know, overall, long term, if it holds this 236, what is this 236? Well, you get it from the trend-based fib extension level. Let me just delete this real quick. So you get, you know, from the bottom here to the top of the impulse retrace, and it projects that out into the future, and that's kind of where you start to see these fatigue levels on these fibs, and then get rejections off of that 105.786, which coincides with the fair value gap. And then we came back down, and now we're retesting that, and we're starting to see a rocket ship appear on the dollar too. Interesting. So just as we're getting a nuke on BTC, we're getting a rocket ship on the dollar, as they are inversely related. Let's go look at the dollar the last time a rocket ship appeared on the hourly time frame. We had a few over here. We had one that played out for 2%, and we had a dud. We had a dud over here in January, but eventually started to round out and go. You had another one that played out from that point. So in general, you do have some times, but overall, like, rockets are pretty strong plays in the game to mind. If they can lock in on an hourly time frame and above, it means the elasticity has been stretched to lock it into position on that time frame. So it means it rebounds from that point. So that's what we're seeing right now on the hourly time frame for the dollar, for whatever it's worth. And that most likely says that the nuke could be kind of chilling out for now, to at least refuel for on Bitcoin, for it to refuel off some liquidity late longs. I wish this was a little bit faster. How y'all doing? Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Let's take a look. So it looks like we got like 2 candles, and then it started to play out here. Okay, so the dollar's attempting to find like inverted head and shoulders, try to reposition back to the upside on multiple time frames here. And just as the BTC is starting to fade out a little bit, and you're seeing these nukes kind of play out as you reach the rejection of that 2 level on that little mini impulse retrace bullish fib idea. So you'd just be looking for it to come back in the immediate vicinity. They came back into this candle. There's another candle down here. You know, if you don't have high block, you can do these things to find fair value gaps, which imply liquidity pools. Now we're showing you the actual liquidity using high block capital, which is using it's $70 a month, and we're going over it for you free here every day, providing value for free, and basically showing you what those fair value gaps mean if you're looking at the charts without it. So you don't necessarily need to pay it, but it's nice to have if you have it. So we're gonna go see what juicy liquidity lurks below. So as we see here on this 15-minute time frame, this is a fair value gap. If we go to a lower time frame, this is likely, this was traded nicely in this region. So the place that wasn't traded nicely would have been here. So this is the fair value gap as it stands right now on the 5-minute. So it could come back down into this region, which would coincide with you break the cloud, you come back, you kiss it. So it's coming back to kiss the cloud as it does, which also coincides with the ATR of this backtestable formula. So there's a lot of confluence for it coming back to here at least to test the liquidity and refuel. So what does it mean by refuel? Well, let's just take a look at how much money is sitting just below in those candles. So you have a bunch of like 241 million, 115 million, 69 million, 91 million. All of these longs that are caked up here are still open in profit. 183 million, 45 million. I mean, I can go even more narrow. Each one of these bubbles, 241, 183, 208. So take your pick, man. These bubbles are juicy, and they just released a lot of old trades up in here. So they got all these guys. Now who do you think they come back for? They come back for these guys. So 25.26. That right there, 208 million. That looks good. 20, and then there's like a little gap. So just down to this here region where it's like kind of thick up to here, but then stops here. So 25.26. Let's see where that is. 25.26. Boom. It's right there. So we could be seeing this retrace right down to here real quick, and then if we go higher, we go higher. But just in terms of an immediate scalp off the liquidity, you got these nukes that locked in on an hour time frame. I don't fight the nukes. I don't fight the rockets. I go with them when they'll let me, if things will coincide with it. And if it knocks you out on one try, you try the second time. And eventually you'll get the proper top. The proper top. So, are we coming down into these regions? I wish it wouldn't reset like that. It updates everything, so there we go. Yeah, so this region looks like they could come down into this just to kind of refuel off of these guys, stop paying them, and at the same time take their money to launch it higher if they want to go higher. And that's all these flags represent. All these patterns and all these kind of falling wedges are just eating the liquidity to go back up again. And boom, watching it play out to a T. You don't need to draw trend lines. You don't need to like necessarily do that. You can kind of just gauge where the money is and what the mindset of the liquidity provider would be. Like, why would they want to pay these guys who are all in profit? Once they got these guys out, they have no incentive to go higher, and they would come back and chew into some of this a little bit. Now, based off, you see how many people open up at this level. And these are all leveraged. This is a futures position thing. So these are all leveraged traders. And it says that long liquidation's 100x. So that's 100x people. So they're getting paid 100x of that. And they don't want to pay them. So they come back and they've just popped this 121 million guy right here. Now he's gone. He went long there. They went up. He didn't pay himself. They came back for him. Alrighty then, let's take a look at what you guys are into. We were looking at Matic too. I want to see how Matic turned out. Wow. It broke through those gaps. Went up to the 2 region to the dollar, and then came back down, bounced off the liquidity, and then just went higher. And we're seeing this continue for Matic. And this pocket was an even bigger fib retracement because everything's fractal in nature. We're reclaiming the adaptive moving average here. Bullish, bullish, bullish. It's pretty amazing. Get the 2 hour in your favor. I mean, in general, you want to be buying down at these red levels, these where it's telling you the green, not at the red up here. But I just can't help but like look at what's happening here. It's just so amazing right now. How quickly they came up for it. It was so amazing. And you're getting the higher time frames to turn, showing you the suppression finger here. So let's go to a lower time frame and show people how these crossovers occur, shall we? Let's just switch to Heikin Ashi real quick. So as they cross over here and you get a birthday candle like so, like I think it's here, right there after the crossover there, then you would kind of enter and then you ride that to a point where it kicks you out into profit. And then you try to see that occur on the other side. So you got a crossover event here. And now you're getting a crossover event here. I was told that the 2 minute is the 1 minute has too much noise on Bitcoin, but on the 2 minute it's better. So if you get these 2 minute crosses, and then you got the this candle here where there's no rejection wick, then that's where you enter. Upon close of that, you enter, and then you would have gotten from there as your entry. And we haven't yet seen a crossover yet, so it could keep fading down here. You are getting thinning on the cloud here. This is a volume weighted moving average cloud, which factors Heikin Ashi as well. So you're starting to see that thin on the 2 minute. So it could bearishly retest this cloud and then continue down to here. So these are just things you could use to monitor your trade. It's like putting things in a predator vision mode where you can look into the trade beyond patterns into the liquidity or into the momentum. That's why it's called Momentum Master. You're kind of trying to see where the momentum is, where these ATR structures, where they would find bounces off of these backtestable average true range levels. And you're starting to see that curve on the cloud here, higher time frame suppression finger pushing down. So we could see this recovery of that fair value gap. Nothing is a guarantee, of course. But you would see this crossover. This is what the DNA helix is for. The crossover of the leading moving averages. They're above the price action here. You wait for that kind of no wick candle. You enter on the next candle. Boom. You ride that down. And this is what the scalpers in Momentum Master Discord are doing to make gains on gains with their... And it works with anything because they're doing stocks right now, ripping it up probably as we speak. Shout out to everyone in the Momentum Master Discord and Rainier's Discord. Love you guys, man. Hope you're feeling better. So we're going to test to see if this goes down to here real quick. Getting that fade on there, and then if you see it cascade to other time frames, then you start seeing it on the 4 minute. So you got the 4 minute one here, for example, and then you had that kind of candle here, but realistically that would have been a good one. And that would be where you would move your stop loss into profit right there. So you'd be like, you move it here, and then that would have secured, 0.74. And you just kind of like ride it down. And then as each 4 minute candle closes in this downward momentum state, you move it to these levels and secure more as it goes down. And this cloud's pretty thick, so you might pierce down through it and come out. And it's kind of cool how these ATR levels, and they coincide with these like fair value gaps and stuff like that. It's pretty amazing how the math adds confluence on confluence sometimes, and you just take those confluence regions. So this would be the scalp, and then you look for some sort of like bullish order block to like take you up, rather than you FOMO off of green candles. Or you could be the higher risky scalp short guy, and then like looking how this works on Momentum Master. How do you scalp? And you see how these baselines go above the price action, and they kind of guide over it. It's like gliding over it like water. And so as you see the price not able to go above the baselines, it starts to fatigue, and then you can ride that fatigue like water flowing off a duck's back. It just rides off it. And the same thing when you're going up, it goes beneath the price and scoops it up and then takes it up with it. And so this is the scalper's dream. That's why it says on here, it says, what are the baselines? It says these are your first signs of reversal. The baselines are one of the few leading moving average formulas you will find in the market. When price action rests on or above these and the baselines begin to cross, upside begins. Conversely, as the price action closes beneath these and begin to cross, downside begins. While this formula works well expressing the first signs of fatigue on all time frames, this will ultimately be a scalper's dream. And what I made a keyword on all time frames because Peyton's in the Discord, really amazing guy. He's really observant, and he put out the cross that was occurring here on the 5-day. So he saw this crossover event on the 5-day, which before this dump occurred. So he was seeing that significant dump inbound based off the crossover event, and we were seeing the top of the initial BTC idea when the 8 hour started to cross up here, and it kind of signaled the downside from there. So you get these crossovers that just kind of tell you when the move is kaput on these higher time frames as well. And then same when you get the crossover on the underside, it tells you when these big plays could be coming. So you get that confluence on confluence stacked on these higher time frames. So let's go back to this and see how it confluence, and then you move this down to here and you lock that into position. Let's go back to the 4 minute. That would be here. And so then if this 2 minute candle closes in the red like that, then you move it down to there. And apparently it just doesn't come up above that point. If it intends to continue lower, it would just keep going. And if it knocks you out, it knocks you out into the profit. GG, the end. And you can take a little bit and leave some like it with stop loss at break even or something like that. We're reaching the outskirts of the cloud, which shows, you know, they get these buyback wicks on the edges of this cloud. Discord in the house. Thanks for the shout out. You're the man, Rainier. So this is how I understand it works. Like, to be honest, there's like lots of really good trader guys, and the guys who found this like strategy using the baselines and stuff, they're killing it, man. Shout out to Smurf and Peyton and Dylan and all of them. Best of luck in their funding journey. They're going to probably be funded within the week by the looks of it. I don't want to jinx it for them, but Yeah, so you just basically ride these momentum waves, and this is why it's called Momentum Master. You kind of catch these momentum bursts and shifts before they appear in patterns. So, and then you're on the outskirts of the Keltner channel. It's kind of like an average 2-range Bollinger Band, and you're getting some. You didn't have bearish divergence, but you could see the Williams try to make a reset on these time frames. Let's look at 10-minute. Got front run bearish divergence on the 10-minute here. You got the Williams, the MACD about to cross. So this is a MACD, a leading MACD formula. You can also fill it in to make it into a momentum wave. So you could take this MACD and fill it in. And this MACD is about to cross, and you could get the MACD crosses alerted to your phone. You could say like pump or dump. And you set it for the time frame you're choosing. If those cross, it tells you the trade is now getting momentum to the downside. So you could be seeing the MACD start to cross over and cascade this 10-minute down some more. You're already getting a reset of the stochastic RSI here, and the money flow and the RSI are in the red literally, and just coming out of the red is the money flow. And that suppression is coming and affecting the MACD here, and you're getting the alarms on the Williams. I quite like the 10-minute time frame in terms of seeing like where things start to lock into position. So you're starting to see this possibly come down off the momentum of the reset, and it could cascade to a 10-minute time frame and below. We are getting some buyback strength here. Let's go back to the liquidity and see what's coming into the charts here. Let's do a refresh on this. Dirty P Martini Gang. Yeah, that's Smurf's name for it. I'm going to get a haircut tomorrow. It's been a long time coming. My hair's just been wild. I haven't gotten a haircut in like months. Alright, here we go. So you're getting a lot of shorts enter now too. So the more shorts that enter, the more conviction they have about it going down, the less it has the ability to go down. They become the fuel to go up, and same here, the more that enter long, the more it goes down on them. It's the irony of the Cassandra complex of the more that believe it's going one way, is the less likely it will go there. So you got a stacked amount up here at 26.67 now. A large amount of liquidity entering these smaller bubbles, not as much, although you do have these guys down here. Like, check this out. These guys opened up their trades here, this 273 million, and then they just came right up to it. So in a very little amount of time, they lost so much money because they thought the top guaranteed was in, and they just became fuel. So the more shorts that just keep opening up here, the more they just become fuel to enter. And of course, longs have been trained not to do that. You don't enter green candles, so there's not as many big bubbles as there are appearing above right now, up at the top here. So you're starting to see like more fuel being entered in, and then I want to get it in a fair manner here. There we go. So this region here still has like immediate region at 25.2 has that more stacked amount than what is currently above. It would have to go up from where it's at 25.8. It would have to come up to, you know, 26.6, which is a large amount, which means it would have to pay all those guys that much more. So these become much more heavy of a weight, even though it wants to get these. It wants to get everyone. That's the idea of the rock in the hard place. It's stuck, you know, finding that imbalance and then just eventually dropping towards the imbalance or moving up towards the imbalance. And then once they clear the imbalance, you have your criteria check for the liquidity grab. So you have that higher time frame point of interest and then the liquidity grab of it all. So we're going to go left of the charts and try to find where this might fatigue on a Fibonacci level real quick. Let's go ahead and let that percolate and see where that goes, just based off the crossover event. And we're going to go to a daily time frame and then go into this impulse here and try to find the fibs on this impulse to find our way out of it. Okay, so so the 618 is at 26.04. We already crossed that terrain by the looks of it, and we are kind of getting into a point with it. Let's just go to the 4 hour. So this golden line is the 618 on that daily time frame fib level. So we're kind of getting a rejection at the 618, the 6 Juanita as Jason Casper calls it. Shout out to Jason Casper. Real recognizes real, man. That guy is real. Check him out if you haven't seen him. Wait, what? Why is it? Oh, it's just I zoomed in too much. So we had that rejection at that region. Let's go to lower time frames, shall we? 5 minute. So that 618 also coincides with that level. So this is the exact 618 of that daily time frame. So that daily time frame rejection, if you don't see that rejection play out and continue, then different levels, which also coincide with these bullish levels in between this pocket here, is the next region if it holds that 618. And so that would have kicked you out, and so you would have guaranteed like 1.628 profits and you'd be out. Boom, you're out. And you didn't get the move you were looking for necessarily, but you scalped it and you got what you came for, which was profit. And then you're out. And then maybe it continues lower to that, but so be it. It's better than it coming back to your entry. But this is how you see the baselines crossing, and then it almost becomes like a suppression point for the price. So the price just can't hold this baseline. And that's why they're called the baselines, because it's the baseline for the price to maintain before it goes the other way or not. So that's your first sign of reversal. And if you're making higher highs, if you have the higher high, lower low look back turned on, if you're not aware of where the highs and the lows are, it draws those for you, and you're making like an E formation on that. You have this like 1, 2, 3, like the letter E, like a capital letter E. And then if it surges up and creates like an M, but it doesn't make a higher high here, if it doesn't make a higher high here and you make like something like this, then it could come down to there ideally, because that's how they fake out shorts. They induce more longs, and that's why you get the McDonald's pattern is they fake out the longs and then they come back for them, but then they also fake out the shorts and then don't pay them. So that's why it's always double bottoms and double tops for days. So we go to the lower time frames and take a look. You got the 5-minute reset. So that's how you would scalp the 5-minute, essentially, and then hope that it cascades to a 10-minute time frame without ticking you out. And the 10 minutes starting to reset here, but you could be seeing that rejection if it goes and surges up and creates this bearish div on there. If it goes and makes a higher high on here, but you know you're getting less money flow, then you could be seeing the bearish div that it would auto calculate for you with these diamonds. This is a different indicator I'm still working on. That's multiple time frame divergence, but that's for another day. So you're getting a cross on the 10 right now. So you're getting the crossover event. That's locked in, and then you'll get like an indecision doji, apparently, and the indecision doji will lead to the candle with no wick to the downside, and then you could play that play. So it would probably be trying to play out the 1 minute and trying to rise the 1 minute up, which it is, to being overbought. And reclaim the cloud on the 1 minute. And so this whole idea of like going through the cloud, come back, kiss it, continue, all of these ideas remain intact for all time frames. So you just need to learn what you're looking at, and then it applies to everything. And then you see these clouds, and then it goes back and kisses it, breaks through, goes back, kisses it, continue. And so these things become these scalable, fractal-like ideas that just play out on all these time frames. You're getting that crossover event on the 10 minute. If it locks in properly, you could just hold true and then just see it get faded. And this blue line right here is also like, I think, a 706 level. It's a 706 level, so if it gets rejected there, then it could come back down to the 6.5 with the passion. So that 618 on that higher time frame, that's pretty cool. So this daily time frame drop from back here, that's the 618 we're at right now at 26K. If we get rejected off that, then we could expect to come back a little bit into that region to chill out and refuel a little bit. Once again, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Samurai top knot with hair. Yo, what's up, effing book? You gotta read an effing book. I'm not gonna cut it that short, Wendy. I'm just gonna cut it a little bit because it's like literally like longer than my wife right now. What can I share? I want to read something from, let's just pick a random page from the Tao Te Ching, shall we? By Lao Tzu, a philosopher from Chinese 3rd century. I'll just go to this page randomly. It says, Tao does nothing but leave nothing undone. If rulers could grasp this, all things would transform themselves. Transformed, old desires would be stilled by a simplicity without name. Released from desires, we find peace, and the world settles itself.
keep me waiting. I'm still here. Don't keep me waiting.
Until we get monetized, I'll be using copyrighted music, as long as it doesn't strike me down, because it's better than the streaming stuff. So we're still expecting this to come back down at least a little bit, based off of the liquidity on these longs here versus the shorts. 25.26 region is where it starts to, at least have this little chunk of happiness here to take. We'll wait until, I don't know when, and it's so cool that the ATR just takes you right there and it coincides. So cool. Let's see if the liquidation. Oh, nice. So we got 2.5 million up of here, 2.5 again. Let's just try to look at like where these dots are. 2 million, 2 million, 2 million, 2 million. 54 million. Wow, that's a lot. Open here, a short. 4 million, 700K, 1.8, 4.69. The thing is this is just Binance, and it doesn't keep a cache that's that long, so I don't look at it. That's why I ended up getting High Block. It gives you like accurate, open, real-time trades with detail. So let's go to the 3-month here and show you what we're eating into a little bit, and then we'll call it a day. We'll just do one last recap and call it for today. So as we were coming down here, we were wondering if they're going to come up and grab that 10 billion here before going down. They just ripped it straight down, and we were wondering how much of this they were going to get before coming up to the 26K region we've been looking at since we started streaming about the liquidity pools up here, and they just ripped it in an unbelievable manner. And this amount still in play in terms of a target that they could eventually come back to at some stage. But in the meantime, they came up to 26K and took out a bunch of 40 billion, 37 billion, 34 billion on this immediate 3-month time frame. But realistically, we went over how that's been building over the course of a year back in the since the June time. So you've seen basically this region building up to $178 billion at 25.6, and 110 at 26K, and 104 at 26.4. So the 26.8 region still could be a target, as could everything leading up to 28K, because there's still 100 billion at each chunk of the way up there. They might retrace back to scare out as many people as they can before refueling enough to do that. So where would they go back realistically at this time? So that's where you look at the 3-month and the 1-month. They just came and ripped up all the shorts. So where the longs caking up in this region, we have to go to the 1-month and the 7-day to see that. So it's currently in the 2 billion. They really got nice because they scared everyone out. So there's very little liquidity in this region. So this could be a way to maintain and hold this region, because they don't have to immediately go back. They do have people down here, but it's pretty sparse in terms of what they induced for longs. They did a good job of keeping the FUD in their favor for that move to the upside. Not that many people were entering. It was moving solely off their intention to grab this stuff. So there's not like billions upon billions down here. There's more up here. So the move may not be over, folks. The move may not be over. We still have Wednesday. Remember, false move Monday, Tuesday's the move for the week, complemented by Wednesday sometimes. Then you have midweek reversal on Thursday, run for profit on Friday. So we're not in that sequence where a reversal would be necessarily in either. So you'd be looking for a refuel, possible bounce at some stage down at somewhere if you're playing the risky ride the wave game. If you believe it's going to come up to these regions and test the highs again and take out some of this liquidity on the upside. Ideally, you want to see the 15-minute come down alongside the Williams here and reset in a bullish manner. We went over what the bullish manner was, similar to how it held the price action horizontally here and then reset down, and that happened on the hourly time frame. So the hourly time frame was resetting nicely twice. They did it once there and they did it another time here. So you had this horizontal maintenance while the stochastic RSI reset. So if you do that again, then you see another leg up from here. So you ideally want to see that come into a pocket again with the hourly and the 15. Unless you want to take like a high risk play on like just a 15-minute only, but this is where you would be reaching the end of the line at some stage, as all the red diamonds and stuff suggest, and the nuke that was appearing not too long ago. Alright, ladies and gentlemen, I'm going to call it for the night. I mean, basically you're going to either see some continuation up to these regions or a retrace down here. It's kind of, I would expect a retrace at this point to at least chill out, come back into this gap, eat it up, reset some of the 15 and the hourly momentum, and then see if they can build another leg up to the upside there. So in terms of what we had of a place to call it, so you can have like, you know, that double top scenario, and then you come back down before you come back up again. So you'd be looking for some sort of fade on some time frame where it's fading out on the baselines potentially, and then coming back down for that double top scenario, and then coming back into the liquidity a little bit, and then finding a bullish order block somewhere at one of these fair value gaps. Like you have some more fair value gaps down below as well, so you go into your charts and start marking these off and looking where these zones would be, and then using Fibonacci on your side and taking this impulse to the top and seeing where that coincides with you know, some bounce level ideas. And that's about it. That's just my story, and I'm sticking to it. Once again, thank you for coming on in, and I'll catch you guys on the flip side. Peace.